Afternoon. How are we doing? Sorry, I'm late. I've had one of those days today. I am here, FTNet morning. Wojciech, Danny, Fletch, it's time. Church, your road. How are we doing? So I had a nightmare today. Had lack of internet and the joys of being in a new house, basically. New build. Stuff works really well 99% of the time. When it doesn't, it's a nightmare. So back. Fingers crossed. If I disappear, you know why, basically. The internet's a bit tricky at the minute. We missed the member stream this morning, so I'm going to have to reschedule that. It's not a bad thing, actually, because there's a new function rolled out on what I was going to cover this morning to do with EA development, which looks pretty amazing. It's probably a good thing that we didn't do it this morning, because what I'll be able to do is cover a full session with the new functionality on the EA builder thing as well. So, but anyway, we'll go through the normal stuff today. We'll start with the indices this morning. Very nice, clean, easy break today. So the DAX and the FTSE this morning, very simple ORBs, very textbook today. So there's your 5-minute range, clean break to the upside, straight to target. That's my partial profit target, which is basically roughly 2R. And then we had a slight flag pullback and continuation. So it's a trend today. We're still trending. I'm still in it. Trading stop loss is basically just trading price. So yeah, really nice textbook easy trade on the DAX this morning. FTSE very much the same. We sat around after the ORB, after the opening range was put in, for about 40 minutes or so. Then we finally broke and hit TP1, which we are at. So I've manually moved the trailing stop behind this propulsion gap. You've got this high here, basically, which is obviously what we hit this morning. We couldn't get through on the FTSE. So we broke through that finally and pulled back into the top of the propulsion gap, which is now holding. So I've just decided to trail behind the propulsion gap. So we'll monitor that one and see where we go. But yeah, banked $2,000 this morning. US indices. Obviously, we've had news, which we'll cover in a minute. So we've got a bit of a gap up scenario. S&P looks like it's going to pop down and do that gap. But US indices today, obviously, we've had a little bit of news, but not really a lot. We haven't really gone far with it. So Dow's broken long, S&P hasn't gone anywhere, and the Nasdaq's broken short. So we'll see where we go. That looks like a lovely hedge thing going on. Unlikely we're going to get any profit out of those, is it? So let's have a quick look at the news and see where we are at the moment. So today's been basically hasn't updated for some reason. There we go. So today's been a bad day for the dollar, basically. If we have a quick look at yesterday's news, because I wasn't here yesterday as well. Afternoon, Brian. Afternoon, Trade Prime, who's retracted their message so I can't see it. CPI yesterday for the Canadian dollar came out on forecast, which was great. Afternoon, Harold. The median was up, the trimmed was forecast, and the common was down. So for the Canadian yesterday, it was a kind of mixed bag, a little bit bullish, but not a lot. So that's what we got out of the CAD yesterday. The dollar, the monthly, we got a drop on it. So inflation has come down month on month, but overall annually it's higher than anticipated. So what that shows you is basically short-term downward movement, but long-term we are moving up. So it's going in the right direction, but it's not really neutral, not really bullish, not really anything at all. So if we have a look at the dollar and what it did yesterday, I'll go through that Swiss yen trade I'm doing some drawdown control on at the moment. US dollar yesterday, as you can see, we had a slight bull move there. Very big bull move against the Swiss. and a bull move against the yen. So obviously the pound US dollar came down and the euro US dollar came down. So overall, the market is taking this as bearish for the dollar. So although we've pushed up on the annual CPI, which is a bullish indicator, month on month, it's actually come down. So I think the market is reading this as, okay, right, although that is stopping the Fed dropping interest rates, this is encouraging the Fed to drop interest rates. So potentially a faster drop than normal, than anticipated. So it looks mixed at the moment. The market is reading in, obviously we've got a bull move, which is to do with this. But it's not a massive bull move. We just about got an ADR out of it yesterday. Probably actually a little bit more than that on the against the euro. Yeah, so about 150 ADR. So as you can see, obviously, sorry, I read that wrong, didn't I? I'm reading it the wrong way around. It's a bull move based on the 2.7 number. So short term, obviously we're looking for that to be a negative move, but long term we're looking for it to be a bullish move. So the market has taken into account this one rather than that one. I've got that the wrong way around. So potentially continued strength on the dollar, but the short term drop in inflation means that I think we're likely to do a little bit more of that rather than that. Yeah, so it's not a massive bull move I don't think we're going to get, and not going to be sustained. We've also got the tariffs hanging over us at the moment, obviously. Bailey spoke yesterday, nothing exciting came out of that. If you look at the pound, you can see there's a little pop yesterday, but that wasn't on that one, so it wasn't on Bailey. So there's nothing came out from Bailey yesterday that was bullish or bearish at all. CPI this morning was up for the UK, badly up as well. 3.4 was the forecast. We got a 3.6. So I'm very surprised we haven't had much more of a bull move than this today. I would have expected us to be up at 100, 125 ADR or more by now, but we haven't. So market not really reading anything into that. We've got an ADR there against the Swiss, but that's because of the Swiss franc move, which I'll look at in a minute. So as you can see from the pound, no reaction really to that this morning. We had a slight movement, but nothing exciting. So again, usually we would expect that to be a fairly bull move, but I think at the moment, because of obviously what's happening with the dollar, market's kind of sitting on the sidelines on that one. PPI came out as negative. So again, the producer price index is down, which means that is a leading indicator for lower inflation. So again, this move that we've got is counter to what you would typically see with that. You would see weakness coming into the dollar on that. You would see weakness coming into the dollar on that. We're not seeing that at the moment. So again, just another indicator that Trump is in charge. The market is not really interested in what's going on with these numbers at the minute, because any second he can change his direction. So we'll see. But yeah, no real reaction or inverse reactions to the news so far. Tomorrow we've got Aussie dollar unemployment. We've got the US retail coming out and unemployment claims for retail, so for the US dollar as well. Average earnings doesn't do a lot in the UK. So really, that's your last event of the week. And then we've got University of Michigan, which, as we know, can go mad. So we'll see what happens with that one. But yeah, so looking at everything we've had today, let's just quickly look at the indices, see where we're going. Yeah, so stopped out on the Dow, that long break. One of those was going to stop out because we can't break short on one, long on the other, and both of them work. Very, very rarely we can, but doesn't usually happen. So yeah, stopped out on the Dow, and we'll be flipping short when we get down there. But the Nasdaq and the S&P have broken short. Let me just quickly see where these are off to. I presume my DAX and FTSE will stop out shortly. If US indices come down, then these will get dragged down with it. So I'm just going to leave that where it is, actually. That'll trail. So S&P downside is a very tricky one. If this breaks short, we've got a gap fill. So when we hit that gap fill, obviously we've had a bit of a bull run into it. So there's a probability that we're going to find some kind of reaction out of that level. If it doesn't, obviously this is the high of Globex before we got the news. So that is where you're going to find some buyers. So it's going to be quite tricky to get down there today. However, yesterday, as you can see, beautiful day yesterday as well. Really simple, easy targets to the downside. So I'm just going to leave that where it is at the moment. That's a standard risk reward. NASDAQ, easy short on the NASDAQ today. So there's your Globex low. So if we can come down and test Globex low and we bounce off of this, I'll be taking a partial down there. And again, yesterday we broke short eventually, but yesterday was actually basically that. So big rejection candle on the NASDAQ yesterday. Dow Jones, not in at the moment. Oh yeah, I'm short Dow as well now. So triggered on the Dow. Again, Dow and the NASDAQ pretty much the same play. So coming down into the Globex highs before the news. That's where the news hit, but that was the run up into the news. So we'll see if we can get down there, but a bit of a choppy market today. Doesn't really know where it wants to go at the open, does it? Right. So yeah, really good. So far this month, phenomenal. Banking tons. It's literally every day has been a nice clean break. Every day we've had at least one or two ORBs which have just gone parabolic. So, you know, virtually impossible not to make money in these market conditions. It's when it's choppy that it's hard. When it's like this, yeah, give it to a monkey, they'll make money. Anyway, RSIs and ADRs. Let's check. So bad day for the dollar means people are not keeping cash and start to put value in something else. Bad day for the dollar means people are not keeping cash. This isn't people you're looking at. This is institutional price action. People don't make any. You and me, we did it. You can get an experiment together. Go and find everybody in every trading room you can ever find and get them all to press a button at the same time. This won't even tick. This is not people. This is banks and institutions moving this. So yeah, they will be buying the dollar basically in anticipation. Swissy. In anticipation of basically that upward tick in inflation here, meaning that the Fed will not drop interest rates. It's whether or not this becomes more prevalent. It doesn't look like that's what they're reading. The market is reading this figure as being bullish dollar. Personally, I don't think it's a massive differential. We were 2.4 expecting 2.6, so we were expecting a +2 differential. We got a +3. Not massive. You know, it's the difference between these two is what creates impact, not the difference between the previous and the exact figure. This one here, we were expecting it to go up, and it did go up, but not by as much as we were anticipating. So again, these two differentials are very small, but the market is reading it from that at the moment. So they are bullish for the dollar. But we had a lot of other stuff yesterday on the dollar, obviously. So we had Trump, obviously, and his tariffs. Europe responding, saying, well, not quite sure what to read from Europe at the moment, but Europe responding, saying we've got a toolbox and we can use it on you, basically, which in effect could counteract all of these tariffs that Trump is putting in place. But he's threatening basically more tariffs. So the market will basically go sell stocks, buy dollar, potentially. So yeah, piling out of stocks basically. When you initially liquidate stocks, it automatically rallies the dollar because the stocks are priced in dollars. So if you liquidate your stocks, you put them into escrow with the dollar to start with, and then you can move it wherever you want, into commodities or whatever. So whenever you get a downward move in the indices, you tend to always get an uptick in the dollar. And as you see from yesterday, we did get a downtick in the indices. So, you know, we'll see. Euro yen ADR. There's a lot of ADRs going off, so we'll whiz through these. So Swiss yen, we'll start off there. That's really nice and handy. So Swiss yen, we are ADR today. As you know, I've been stuck in this for. God, I've got to scroll out. Look at that. I've actually got to scroll out twice to get back to my entry. Back in June. So I entered this on the 6th of June, stupidly. because it was the only yen pair I could trade from a cost perspective. I got stuck right at the beginning of this breakout squeeze. So as you can see, with this trade started there, I banked some, did some drawdown control, scaled in some more, got into an aggressive drawdown control position, banked some, scaled out, did drawdown control, scaled in, scaled in, scaled in. These are smaller positions that I was scaling in with, but getting more aggressive as we went. That was my last position. I took a little bit of a loss on an aggressive drawdown control position there. But basically, these aggressive drawdown control positions that I had on up here were 100% of the lot size. So this was basically a super aggressive position. Managed to get out of a lot of these lower positions using these high risk positions here. And I've still got I've got two there, I think I've got two there as well. So I've got 6 aggressive drawdown control positions on still at the moment. So I'm just seeing how far this Swiss franc weakness goes today. But basically, as you can see, I'm back to break even now. But I've still got quite a high risk on this. The yen is moving as well at the moment. ADRs all over the place. So yeah, I've managed to get the drawdown down dramatically on that, scaling out of it. This has been a very nice move today. As you can see, we've had like a very big, strong Swiss franc retraction. So Euro Swiss all the way up to the upside, Pound Swiss all the way up to the upside, New Zealand Swiss not quite so much, US Swiss ADR as well. So the Swiss franc basically getting hammered. We were expecting it. We knew it was going to come at some point. The Swiss yen is the worst of the bunch, basically. So I was in the worst one, but we were waiting for that Swiss franc weakness to come through, and it's today. So everything that anybody was in on the Swiss, this is payday basically for you. If you're stuck in a squeeze, you will be able to release some of the pressure, but not a lot, depending on how aggressive you've got with it. And I've got really aggressive with this one because also it's the yen. But this will potentially weaken now for a couple of days, this Swiss franc, because of these numbers and this rally that we've got going in onto the dollar. But the yen is still very, very, very weak. So I don't know how far this one's going to go. If you look at the last pullback, the last major pullback we had, and that sort of interim pullback, you're looking somewhere in the region of 2 ADR. This one's about 125, I think. Yeah, see, actually, that's only 1 ADR. So somewhere in the region of 1 to 2 ADR from the high. You've got 1 ADR from the high already. So worst case scenario, I think you'll probably come down into 150 to 175 ADR, maybe 200 ADR, if it's not going to pull back and do this, basically. So this whole leg, if you go out onto a higher time frame, you see what you're dealing with. Yeah. This is what we're going to pull back on. So if you look at previous price action, yeah, anything parabolic like this, that's what you're looking at. So we should be witnessing quite a big pullback on this now. The downside to this one, obviously, is 2 safe havens, or rather, we're not sure if the yen's a safe haven anymore. So there is potential for this to power back up again if something goes wrong with Trump or something goes wrong with conflict. So I have decided just to get out, basically, as much as I possibly can, and kind of just take a hit on it, basically. I've taken a hit on swaps on it. $440 worth of swaps I've taken on it. So, you know, I can get out with 0.5% loss and literally take myself to break even, but I'm going to hold it for a little bit because I think at least we should be able to come and test this propulsion, at least. So that will give me a really nice profit. And I'm kind of fingers crossed hoping, shouldn't hope in trading, but half of it's luck. Hoping that will allow me to do some drawdown control and get out of some of this oil. But we will see. So Swiss yen's obviously an ADR. Euro Swiss is an ADR as well. This one's already pulled back from the highs. You don't think you got a reversal alert on it? No. So reversal alert is all the way down here because it went parabolic like this up into that high. So you haven't had a signal to go short yet. You had a very big it's a 3-bar reversal and bearish engulfing pattern here. But if you'd have taken that short, obviously you are still there. You haven't gone anywhere. So there's no reversal. There's no structure change yet because it's so fast on the way up. So there's not really an entry on that Euro Swiss. The Euro Yen is obviously extended as well. So that's a nice extension. We just got that one. But again, this is looking like the Euro and the Swiss are going to move together as well. So Euro will come down with the Swiss franc. But there's potential for a nice pullback entry on that one. There's no reason to be bullish or bearish on the Euro at the moment. It's neutral, so it can go either way. We've got the pound Swiss extended. Again, there's a theme here, obviously, Swiss franc. New Zealand dollar yen is also extended on ADR just, and your US dollar Swiss as well. So obviously the day is all about the Swiss. What do you think? What do you think? How far will Swiss yen pull back? I think I just answered that one. Afternoon, Ismet. Can you tell about Bitcoin? Nope. Don't do that. You got weekly ranges as well. Aussie dollar, US dollar. So that one has hit its weekly range now. So we are on Wednesday, middle of the week. We've done our weekly range. So potentially that's coming down into a nice support from last week's low. You've got a lot of propulsion gaps here, but this move here, this kind of V-shaped recovery, anything that is a propulsion gap in a V-shaped recovery tends to be unreliable. What we're looking for with propulsion gaps are ones that break previous levels, not ones that just go like that. Yeah. So we have got more downside, but there's potential for a bounce out of there as well. That's the weekly range hit on that one. We've also got a weekly range hit on the Euro US dollar. So again, nice big strong pullback on this one. This is dollar strength coming in. There's no real reason for the euro to be weak, so potentially we've got a bounce out of that. So you've got a propulsion gap here, a propulsion gap there. Again, that's part of a V-shaped recovery. That propulsion gap there is the one that broke the previous high. So exactly where we are now, if this market structure is going to continue, is potentially where we'll bounce from. But this move that we're seeing here is based off of the dollar news. So like I said, this I wouldn't consider as being massively bullish because short term we are bearish. So you got short, medium and long term exposure and risk. This is long term. This is short term. When your short term is the opposite to your long term, you might get that big strong move, but the market's watching what's going to be happening over the next month. That is indicating bearishness for the dollar. That is indicating bearishness for the dollar. Yeah, month-on-month figures are short-term. The market will react to them faster usually. So when your PPI numbers, producer price index, comes down, the producer price index come down, which reduces the cost of goods. Cost of goods is inflation. Inflation coming down means interest rate drops, which mean everything comes down for the Forex currency as well. So you've got two negative indicators there and one positive. So this move that we're seeing on the dollar being strong is based off of that, but it's not necessarily what the market is going to do short term. So this euro US dollar potentially could easily bounce, but there's no reason for anything to happen with the euro. There are no news events coming up for the euro. We have got retail sales and unemployment tomorrow that can move that. But there's nothing happening on the euro. Your PMIs next week, along with everybody else's, are coming in. But yeah, there's no reason for the euro to be strong or weak at the moment. It's staying stable with interest rates. So there's no interest rate changes forecast for the euro. We are going to freeze ourselves where we are at the moment for the next month at least. So it's intermediate. So I think there's a good chance of a bounce off of that. But you've got this lovely weekly level coming up. You've got a previous monthly as well. On the hourly chart. Yeah, weekly and monthly level. But that propulsion gap and this high could well hold ADR as well today. So don't forget, this has done its entire week's range already now in 48 hours. So it's ripe for a pullback. You've also got New Zealand US and US Swiss extended. Yeah. So again, New Zealand dollar, US dollar, lovely monthly level coming up. Nice big strong push down for 48 hours. That's extended on its weekly level. Again, V-shaped recovery. These propulsion gaps don't really mean anything. So, and the US dollar Swiss. But again, this is again a Swiss franc move. So I think that Swiss franc probably is going to weaken at some point, or rather strengthen again at some point. So yeah, those are your ADR on US dollar Swiss. Those are your ADRs and weekly ranges. We've got some RSI extensions as well. Euro US dollar these are only hourlies. There's no 4 hourlies. So Euro US dollar is extended on the hourly. Nice divergence. Yeah, RSI ticking up, price ticking down, bullish. And US dollar Swiss. Again, tick up there, coming up to the 80 level when we start getting up to that level. If we have to push up into this area here or maybe into that propulsion move, it's going to take a hell of a move in it. 150 ADR to 200 ADR. It's unlikely to get there today, but it might do. If it does get up into there, that would be a beautiful short. But there's no other RSI extensions at the moment. Right, let's have a look at what we're doing here. Right, just going to take a partial on. I'm going to take a partial on the S&P. We're just retesting propulsion at the moment and holding. We've got propulsion gap retest holding on the NAS as well. The NAS is locked in as a trailer, and so is the S&P. So can't lose money on these two. The DOW is the only risk at the moment. DAX closed out second part. FTSE still in long. Again, trailed, locked in. There we go. Anybody got any other pairs they want to look at? Anything else they want to discuss FX-wise or anything? Let me know. So I'm just going to run a quick speed test on my internet. Just out of curiosity. Just making sure it wasn't going to give any other information. It's not bad. I was getting 6 this morning. Occasionally, if I was lucky, I would get 15. Can't stream on that. It's all right. Normally, I get about 260 to 300. I'm on Wi-Fi here with a Wi-Fi booster. If I plug it into the network downstairs, I get a gigabit, basically. But on the Wi-Fi, I get 260-ish usually. So it is looking like it's holding up. This morning was just not usable. It was just unbelievable. I traded on my phone this morning. But when the internet came back up, I obviously turned everything back on. Right. Okay, so 1 minute 40 left on this 5-minute candle. So S&P 500 just about to take partials. Looks like these potentially might be dropping off a cliff again today. So we are holding this range low. Look, so Globex today we hit Monday's low, which is low of the week. Double bottom's the low of the week. So potentially, we are heading back up to range highs, but we'll see. Motion retest. Dow definitely bearish. Look, market structure on the Dow. Very bearish. Industrial stocks getting hit a lot harder at the moment than tech and general business. S&P is pulling back quite hard now. Trying to, but we are still an inside bar. So price action is still bearish. We're inside bar, which is indecision. So it's not bullish, not bearish. It's just not anything. Same with the NASDAQ. Inside bar and the Dow. Okay, so partial taken on the S&P. Second half is locked in. See if this pulls back. So, yeah, worst case scenario today is going to be about 1,600 because this will be a $666 loss. That's not a good number to be, is it? Let's change the $666 loss, please. Got my devil horns, look. So yeah, worst case scenario today is going to be another 600 loss on top of that 2.2 profit. Best case scenario obviously is whatever I get on the trailers. So we will see. Who's your internet provider? I am now on HyperOptic. So I'm in a new estate basically, and I was on Virgin before, who touch wood were pretty damn good until I tried to leave. Then they put out all the cards. But yeah, so I was on Virgin. So you can't get Virgin here because it's new. They haven't laid any cable. So we can have Sky, but I don't want Sky. So I've gone with a bog standard internet provider, which is lovely because my bill now for the internet and everything every month is 26 quid. Used to be 111 Virgin. 111. And I've got double the speed. Plugged into the cable, double the speed. Fingers crossed, no problem so far, apart from this morning, but that wasn't their fault. Yeah. Perils of living on a building site. That wasn't their fault that the internet went down. It was the infrastructure, not them. Okay, I'm going to take a partial on the NAS as well. I just want to lock a bit more in. We are going bare, but I just want to make sure that I lock some more of this in today. It's turning into one of those months, basically, at the moment. So I just want to make sure I take the cash. Trading on the phone, I know. It worked as well. It's surprisingly fiddly. It's not surprisingly fiddly, it's fiddly. But yeah. So I did have internet this morning. I wasn't completely off, but it was so unbelievably slow. My terminal kept disconnecting. I just couldn't do anything. It was, it's like being back on dial-up. I couldn't do anything with it. It was useless. But I could see the levels basically, so I could use this to see the levels. So I basically placed the orders on the phone, and it worked. It was amazing. So yeah, just goes to show you can become a millionaire trading on your phone and sit on a beach drinking Mai Tais and do no work for the rest of your life, apparently. But I wouldn't want to do that every day. Not just going back to manual trading, it's going back to manual trading on a device that is meant for you to make phone calls, not to trade and make money. Anyway, the gurus will tell you that it's possible. Okay, 1 minute left. There's quite a strong rejection so far here. So we just had these bulls step in. And obviously, bears are trying to put a new leg to the downside in, but we are getting beaten back quite heavily here. So it's probably not a bad idea. Take some money off, because it does look like we're starting to pull back here. So 30 seconds left on this candle. Afternoon for Guinea. What did you think about the Aussie US? Mambali, yep. Isn't he the one with the gold teeth? So I just want to watch this for 20 seconds just to make sure that partial gets closed out. There we go. So partial close. So 2.8 banked, guaranteed 2.2, even if this pulls back, stops out. And then I'm going to lock in whatever here. So Aussie US. Aussie US basically is coming down to lows. So extended RSI, only just though. So we looked at this one. You weren't here, obviously. V-shaped recovery, ignore these propulsion gaps. Yeah, they're just part of a V-shaped recovery move. So that's where I'd be looking for some kind of reaction this week. Obviously, this is dollar strength we've got coming off the back of the news, but I don't think that's necessarily going to be sustained. So that's not a bad entry. However, the danger of taking a trade there is you're bang in the middle of the recent range. Yeah, which is where you ideally don't want to be trading from. It's going to go either way. It'll either test that or it'll test that, guaranteed. It's got to do one of those two things. It will break out. It's not going to stay in this range forever. So you're at the moment sitting kind of around about middle of the range. If you go long here, just prepare to scale in sort of 3 to 4 times down to here. But if this goes all the way down to there without letting you out, you're going to get a decent bounce from there. So, yeah, that's a really nice level as well. So it's broke down. That's where we sold from. We came back, we broke up, we retested that level. We tested it twice. Yeah, so there's a lot of interest to go long here. Last 3 attempts or 5 attempts to get through it, we failed. But obviously, dollar was a lot weaker back here. It's got some strength now, but not necessarily going to hold, is it? So could go either way. Could always go either way, obviously. That's what trading is. It either goes up or it goes down. We don't have a choice. It's one of those two things. Okay, so pulling back, or trying to. We seem to have found a bit of equilibrium here. Buyers aren't able to really get any traction either. So watching this area here, seeing if we just reject this. If so, next stop is going to be Globex low, which is there, which is about 22,775. So tempting here to not do this. This is one of the downsides to aggressive drawdown control. When you get here, the size that you have on means you've got quite a lot of profit on the table. There's a real temptation to let it run and get down to a really big target. So the difference between there and there for me probably would have been something around 6 or 7 grand. However, if it bounces back up into here, it's about a 10 grand loss. So, or 10 grand drawdown, basically. So I've fallen foul in the past of getting aggressive drawdown control positions to a point where you can get yourself out of trouble. Don't forget, the whole purpose of aggressive drawdown control is not to make money. Yeah, you'll see from the P&L, yeah, I'm not making money here. We're getting out of a bad position. Yeah, so the whole purpose of aggressive is to make sure that you can survive, basically. So it's about getting out, getting rid, and putting yourself in a position where if this pulls back and then drops, and you do get that pullback started, that's when you're going to bank your money. So at the moment, what we've done is taken the heat off, sat there and gone, right, brilliant. Now I can sit comfortably and not worry about the Swiss yen for a while. So if this does just pull back and do this, I can scale these positions back on again and assume it's going to accumulate and hold up here and then just drag this average price up as we push up. So I've got multiple positions in profit. So if this drops, I can make money on it right now, today. If we got down to 150 ADR, I would probably bank it and walk away. But that's not the point of it. The point of it is to get out of trouble. That's what it's about. So, for me specifically, what I'm wanting to do is get rid of oil. I haven't covered oil yet, have I? So oil basically, annoyingly, as you can see, I had an exit on oil on Monday. So remember in the live stream on Monday, I said, when we got here, I said, oh, that looks like it's going to break that high and go. We pulled back and then we broke through and I was like, yes, this looks great. We're going to come up into this propulsion gap. Immediately, it turned tail on US dollar. So we had this big drop come in, Trump and his tariffs. And since then, yesterday, we went nowhere and then we dropped again this morning. So as you can see, these are tiny positions. These are not my normal lot size that I've got on here. These are much smaller than I would normally risk. So that's why there's more of them in a condensed space. It's not that I'm ignoring my rules. It's that I've got a very, very small size on. So I said when we got this pullback, i.e. when the all stopped happening with Iran, I said, I'll get into a few more positions down here and I will hold it and I will get out at 5% drawdown. I've been sitting in it now for nearly 3 weeks. We haven't got to 5% drawdown. We have gone absolutely nowhere. So I still think there's a good chance this is going to hold up because all we're doing at the moment is we got back to this area here. This was about 4 and a bit percent drawdown. I've added more positions since then, so that probably will be my line in the sand to get out. But we got back into this monthly level here. Yeah, and we retested it. So we were breaking out when Iran kicked off and then Iran stopped. So I think we've got a good chance of continuing just grinding up on oil. We've tested the $55 a barrel. We know we don't want to trade oil down there. $60 a barrel is kind of the line in the sand for most of the oil industry where they say not interested below it. So I think we've had a rejection of the lows and we're going to start to grind up now. As long as there is demand, we'll be fine. They have cut oil production a little bit as well, which should be bullish. So I'm holding it in the hope, basically, that we do get a rally. But it's not looking like it at the moment. Pound New Zealand just got an ADR alert. So a little bit of strength coming in on that pound, which is interesting. So there's your inflation figure. So the market potentially, finally, starting to react to that pound news. Strong yen as well. I'm going to have a Swiss. No, this looks like New Zealand dollar weakness. Yes, this is New Zealand dollar weakness, not pound strength. ADR on New Zealand US. It's just about to trigger. Oh, I broke my dash. I'll come back in a minute when it ticks. There we go. So you're just about to get an alert on the pound New Zealand as well, potentially. A lot of alerts today, a lot of movement, which is what we would expect. We've had no news and now it's all sort of starting to kick off today off the back of this news, isn't it? So back inside range on the Dow. So looking for this propulsion gap to hold. We are holding here. We are holding here. So bears still in control. We'll see if the Dow manages to hold as well. So looking like it could be a short day today. Difficult to read that news, so it's difficult to read which way this is going to go today. Could go either way. Very mixed. Right. That's all I've got for you today. There's nothing much else to discuss today. So obviously from the position trading side of things, and now I'm out of the Swiss yen, I'm going to look for some more opportunities. Pound US dollar, I'm kind of looking potentially for, I was looking potentially for longs on, but I don't necessarily want them now. Now the US dollar's reacting so positively to that news. Euro pound, I don't really want to get into at the minute because it's just grinding away and it's just no ADR on it. Euro Swiss is stuck sideways. This is a lovely little buy from here. but there's no reason to buy the euro at the moment. Euro CAD, I'm in shorts. Don't see any problem with this trade. I've already banked on it once, but I'd like to get some proper bank on this. So I need this down here. I want to try and get 1 or 2% out of that. Swiss yen, obviously, just getting out of at the moment. Aussie dollar, US dollar, missed the entry up here, but not, you would have got in down there basically. So it's not really gone particularly far. So I'm not getting into that one at the moment. Aussie, New Zealand, I've got shorts on. Next entry is about to go in. In fact, next entry is about to go in right now. So reversal is potentially on the cards here. So I've just put a sell stop on that, which will trail up with price until we get that bearish price action coming in. So next order on the Aussie New Zealand is in. Again, another one I got into at exactly the wrong point. They changed the the reason for this trade was the Australians were meant to be reducing interest rates there. They decided not to. So again, just one of those situations where you take a trade and the timing of it is as bad as it could be. But scaled in, so looking for some kind of pullback on this at some point. Upside resistance, got that propulsion move, and then we've got that double top. We've also got this kind of triple bottom here, which was respected again. So there's potential at 150 to 200 ADR, which will be my next entry. And then we'll obviously get out on a pullback of that leg. Like to get the average price above that monthly high for an exit. But yeah, I'm not really looking to get into anything else at the moment. Trump time. It's just so difficult to position trade through Trump premierships. But anyway. So we're still holding at the moment, but struggling a little. So guaranteed wins on those. That will either stop out for 666 loss or it won't. And if it doesn't, obviously that's going to be another monster day today. We'll see. Right, I'll leave it there. I'll be back on Friday. So I'm back in on Friday, fingers crossed. I'm surprised it's held up this afternoon, to be honest, because usually when you have problems with cables and stuff, things go wrong. But yeah, so hopefully I'll be back on Friday. Anything you need, I'll be in Discord or Telegram. Stopped out on the NASDAQ. There we go. So out NASDAQ flat. I'm going to close that buy out up there, and I'm going to close the buys. I'm going to close all the buys off, actually. I'm in profit for the day, so cancelling all the opposite orders. So yeah, I'll be back on Friday. I'm working on this new website at the moment with some people, which I'm hoping to have a preview of for the members. I might try and do something, a couple of member sessions maybe next week to make up for the one that we missed this week. But yeah, so basically I'll be back on Friday. We'll trade the DAX in the morning. We'll trade the New York session as usual in the afternoon and see how we go. But if you've got any questions, I'll be in Discord. All right. So have a good day. I will see you next time.